Hello, good morning. It's Wednesday the 22nd. I'm FX Plu and this is the market brief. So sterling touched a 6-week high of 127.65 against the dollar yesterday. Cable continues to climb despite the domestic issues facing the UK economy, like Brexit, of course, the row with China, and fears of a second wave, and a new entry to the list, Russia. The government is facing criticism over Russian interference in the Scottish and Brexit referendums, and there's also the December election too. Now, of course, Boris has strongly denied any such meddling, but it's a story that will surely resurface. I mean, when Russian hacking gets a plotline on homelands, it's not going away anytime soon. And London is a primary location for laundering Russian money, so government ties are always going to be called into question. But none of that is stopping sterling, and the pound climbed further into a weakening dollar yesterday. We've even recovered most of the fall from way back when COVID first kicked off. Who'd have thought? But it's looking a little overbought though, so we may have to see a short-term correction before any real challenge to that resistance around 128. But as we are trading heavily under US dollar influence, the US needs to buck its ideas up, otherwise this rally may have further still to run. And it's all a bit of a mess over in the US. I think we've got 34 states reporting increasing infections, but several of them are still opening up their economies. Then, of course, we've got the replacement support package that's still being worked on. And the longer it takes, the greater the fear is that the level of support will be less than the original package. Remember, that paid $600 a week to those in need. And that, of course, would add to those analysts that are forecasting a double dip recession. Picture the economy looking like it might be over the worst, only to then fall back further. And that could easily play out if it turns out that the lockdown was indeed lifted too soon and a second wave washes over the country. So all this presents a pretty tricky situation for dear old Donald. It looks unlikely that the economy will recover before the election, and a second wave could really hamper voter turnout. And all of that is fueling rumours that he'll try and declare the election as void if he doesn't win in November. That's one to keep an eye on. Meanwhile, the dollar is on the back foot and the dollar index fell again yesterday, down to around the 95 mark. On the flip side, all the dollar woes combined with the progress with that pandemic relief fund in the Eurozone, and we saw the market buy into the euro. This helped euro dollar touch 115.40 yesterday, which is the highest we've seen since January. But to put the dollar woes in perspective, that previous high was last January last year, January 2019. And after the year we've had too. Whew. Certainly makes you think. Right, well, that's it from me today. Have a wonderful day and join me again tomorrow. All the best.
If you do not have a clue, then just tweet through and ask FX Blue. Yeah.